couple of things that we've done in order to build value in our own exposure. For example, if we want to play China, we think it's better to do that through some of the Hong Kong names. They're much cheaper. We've actually downgraded China at about, this is a little bit over a month ago now, to put exposure into Korea. And we've simply looked at industrials, some of the cheaper consumer names, basically companies that haven't really rallied, because the rally in Asia has really been centered around a handful of stocks. So if you didn't have the 4 large companies, some in Taiwan, but most of them in China, this year in your portfolio would have been down year to date. So it's really about picking the right stocks so far year to date. And we thought if we go a little bit deeper in the market, where we find stocks that haven't really rallied, we can circulate and maybe find some defensiveness. And that's what we mean with this value to growth kind of rotation.
Yeah. Herald, good morning. Tanveer joining in this conversation. You're highlighting some 3 trends shaping up investment opportunities across the region. And I'm quite intrigued by the first one, where you're talking about Chinese empty nesters, parents whose kids have grown up and left home, to buy more premium products. And I wonder how much would that contribute to the consumption story in China?
I think a lot, and much, much more than what people think. And I even dare to say that I think this is one of the larger consumer stories on the planet. But because it's difficult to get data on this, difficult to say, find these people online, because a lot of these empty nesters are not always online, it's something that is underappreciated. Chinese empty nesters, the average Chinese is 38 years at the moment. So a lot of Chinese are going into the 40 to 50 brackets. I, unfortunately, are going into the next bracket quite soon already. But those are the group of empty nesters, because their children, if you're in, say, 45 or 50 years old, your children will be home, because they're like 18, 19, 20 years old. They go to university, and a couple of years later, they have their own job. And because you had a one-child policy, that means that the moment one child leaves, you're an empty nester. Now, these people have done very well over the last 20 years. When the WTO allowed China to enter, outsourcing happened. They were the ones that saw their careers moving into the next gear. They bought property 20 years ago, and that's done fantastic, of course, in China. So they bought a car, they bought a house. They were very well off. And what do they do if they go out? Well, they're going to buy a better bottle of wine, or they're going to go to a Michelin-starred restaurant, or they do a bit of home improvement, or they want to stay fit and do, well, I myself, I'm into Thai boxing. So you do yoga or whatever it is you like, right? And we've seen exactly those sectors, home improvement, parts of F&B, but also sportswear, for example, and travel. We've seen those sectors doing very, very well. And I think this is a secular trend that will continue for the next 5, maybe even 10 years.